Hello traders and welcome to another video review. Today is Tuesday, January 16th, 2024. Let's find out what's going on the economic calendar today. I got only medium and very important data releases on my calendar, and you can see straight on that we have plenty of data scheduled for release from the Eurozone, European Union. So we got plus of course the United Kingdom. From the UK we got the trade balance data scheduled for release at 8 o'clock. Then we got the key event of the day, German CPI data that was released already, and the CPI data are in line with the expectations, 0.1% on the quarterly on the yearly measurement. This is 3.7% in line with the expectations. The other data from the UK are the average earnings index. As you can see, it dropped from 7.2% to 6.5%. Climate count change increased a little bit lower than expected to 11,000. Climate counts. Employment change 73,000, which beats the expectations of 50,000 on a quarterly scale, and the unemployment rate is dropping. It stays at the same level, 4.2%, but it's lower than the forecast of 4.3%. So bunch of the data from the UK. We will definitely take a look at the British pound. Today the World Economic Forum in Davos starts, so maybe some remarks from the forum members will hit the news wires and can cause some kind of volatility on the market, so please pay the attention. Other very important other important data, medium important data, are from Germany and from Eurozone. Of course, sentiment indicator, ZEW sentiment indicators are scheduled for release roughly around 11 o'clock. Then 1 hour later we got the first speech from the German Buba, President Nagel. During the New York session we got the data from Canada, CPI and core CPI data from the Canada are scheduled for release at 2:30, and at the same time we got the New York Empire State Manufacturing Index scheduled for release as well. Global Daily Trade Price Index from New Zealand is scheduled for release at 4 o'clock. Together with some speech from the Bank of England Governor Bailey. Then we got the 1 hour later Fed Weller to give a speech, and at the end of the day another data from the New Zealand electronic card retail sales scheduled for release 10:45. So pretty busy day in terms of the economic data releases. The most important one for today had been released, German CPI, in line with the expectations, 0.1%. Nevertheless, please pay attention to the World Economic Forum in Davos comments from the officials. They might cause volatility. Euro-dollar 4-hour chart is showing us a breakout to the downside. This breakout, as you can see right now, is very much valid, because on the 4-hour chart we got a breakout, then we have the confirmation, and now this market is trying to even extend lower. Where is the next target? Well, the next target is below the 61% Fibonacci retracement, and is located roughly around the level of 1.0777 basically, right? So this is the low that should be tested after this breakout. The momentum is already weak, negative. Bears are in charge of the market just as expected, so we might see this kind of a pattern right now expanding on the 4-hour chart of the euro dollar. So what we can see is, of course, the let's say the wave A, let's say with that low, some sort of the wave B as a correction. Now we can even test the lows of 1.0730 as the extension of the wave C. So that's the current plan for the euro dollar. Let me just move my, okay, this is the trend line stays here, and then I will just move the wave A low. Okay, it's not possible here, so let me just leave it alone. So that's the basically euro dollar. So it's clear as a sun what we are doing here now. British pound, obviously, because of the data. So what's happened after the data were published? From the UK, we got another extension to the downside. So the upside is limited, as we noticed yesterday. All of these spikes to the upside were capped, and now we are below 50, 100 periods moving average. We are testing the trend line, the blue trend line, on a 4-hour chart, roughly around the level of 1.2660. The level of 1.2672 will now act as the technical resistance. So let me just move my my line here, and I need to switch it to red. So we get another intraday technical resistance. It doesn't actually look good for the bears, because there's still room on the RSI indicator. The RSI itself is a weak and negative. There's still room to the downside if the blue trend line is clearly violated. Then we can even test the level of 1.2612. all right, so the pin bar low and those lows from the beginning of the 2024 might be tested very soon, as the progression to the downside will take place. On the British pound, it all looks rather bearish, but it doesn't look that scary. It's not that scary looking. It's just a typical movement to the downside after some sort of the negative data has been published for the particular economy. Now we are going to take a look at the SP500 index, because yesterday we got the Martin Luther King Day, so the index was closed. As you can see, we are opening a little bit lower today. So let me just zoom into the latest situation on the S&P 500. We opened around 4,760 as the level of 4,802 was actually the main technical resistance and the swing high during the up move. Let me just play it here. There you go. The horizontal line is in place. Now what should happen is some sort of the movement to the downside, for example towards the 4,338, or even towards the lows from the January 9th at 4,730. We are still trading slightly above the 100 periods moving average. We are trading below 50 periods moving average, so this doesn't actually look like a double top or anything like this, but the bearish pressure is visible. The RSI is on 46 points, so we either close the gap and make another swing high, or this market will be moving lower very fast. So what do we have here? As you can see, a very nice movement to the upside on the S&P 500. Very nice V-shape reversal. Nevertheless, there is no follow through after this V-shape reversal was done, so it looks like the market prefers either horizontal trend or even move again lower on the S&P 500. And the next market we are take a look at is the market of the gold. Why? Because we got this breakout to the upside here. We got this breakout above this trend line. So we got the internal trend line here on a 4-hour chart of the gold. We broke above it, but then the upside was limited. The technical resistance at 2063 has not been violated. The local high was made at 2061, $3 away from the highs. Nevertheless, you can see that the volatility is limited right now. The momentum is positive and quite, maybe not that strong because it's only 55 points, but it's still positive, and the price is above the 50 and 100 periods moving average, which might suggest some sort of the nice bullish momentum here, and some kind of a bullish outlook for the gold. Nevertheless, we need to break above 2063 in order to rally higher. Please remember that this is not the yearly high. The yearly high is way above this level. The yearly high is roughly above 2143. So this level here is not actually that much for the gold. There is still a room to the upside. We can place some sort of the other trend line if we play with the lows of the November 2023. You can see it clearly that the recent bounce was made almost, there you go, almost on this trend line support. Let me just, okay, so that would be, let me just play with this trend line. There you go. So we got the first bounce, but there is no new high. There's just a bounce on this line, then pretty convincing movement to the upside. We need to move our technical support a little bit higher, sorry, a little bit lower, towards 2012, so that's okay. And then the bounce resulted in a breakout to the upside. So the outlook remains bullish on gold. Nevertheless, it lacks some kind of a strong momentum because the gold is already on the very elevated level, so please don't expect too much from this asset. Right now it looks like that was just a technical bounce. Maybe we will consolidate here, and then we will see what the gold will have to offer. The overall trend is up, and this uptrend is intact. One thing that needs to be mentioned here is the big pin bar candle created at the beginning of the December, with of course the high of 2143, and there is a very big upper shadow on this pin bar. So the supply comes when the market breaks the level of 2100, even 2087. So please take this into the consideration. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.